There's a drawer in a lot of houses that nobody talks about much anymore. A junk drawer, tucked in a kitchen, holding batteries, rubber bands, and a few crumpled bills. $20, maybe. A 5 folded in half. Coins stuck to the bottom, sticky. That drawer used to matter. Now it mostly sits there, forgotten, because nobody needs it. In the United States, cash now makes up a small and shrinking share of payments. Most of the money moving through the economy isn't paper at all anymore. It's numbers shifting between databases, tapped phones, swiped cards, a single push notification. The physical bill in your wallet has quietly become the exception, not the rule. So the question worth asking isn't science fiction anymore. What if cash disappears completely? Not gradually fading, the way it's already been doing, but gone completely and all at once. No more printing presses, no more Federal Reserve trucks moving pallets of bills. The honest answer starts with the people it would hurt first, and they're not who you think. Cash works without a bank account, a smartphone, or an internet connection at all. For roughly 5% of American households, cash isn't a preference, it's their entire system. Take it away, and you haven't modernized their lives. You've cut them off from groceries. Then there's the elderly population, often left out of financial technology conversations entirely. A significant share of Americans over 70 still rely primarily on cash and checks, not from stubbornness, but because decades of muscle memory don't rewrite themselves overnight. Domestic violence shelters will tell you cash is sometimes the only untraceable money someone has. A bank transfer shows up in a shared account. A tap of a phone can be tracked. A $20 bill, folded and hidden, shows up nowhere except when someone needs it. None of that means cash is perfect, or that people who want to phase it out are wrong. The push toward digital payments has real, legitimate momentum behind it. Digital payments are easier to tax. Every transaction leaves a record behind it. Income becomes far harder to hide, and tax evasion becomes far more difficult to pull off. Some economists argue a cashless system could shrink the underground economy significantly. Crime changes shape too. Cash is anonymous, portable, and untraceable by nature. Large cash seizures remain one of the most reliable signals of criminal activity today. The banking system quietly benefits from every transaction that moves through it instead. Card networks take a small percentage of nearly every digital purchase made today. It's not a conspiracy to say cash disappearing would be profitable for the industry. Central banks have their own reasons too, and this is where things get interesting. In a cashless system, a central bank gains a tool it doesn't currently fully have: the ability to push interest rates meaningfully below zero for the very first time. Right now, if a bank charged people to hold their money, most would simply withdraw it. Cash acts as a floor, a limit on how negative interest rates can practically go. Remove cash, and that floor disappears, giving central banks a lever they've never had. A recession hits. The economy needs people to spend rather than save their money. Saving money in a bank account starts costing you money each month instead of earning it. It's a real policy tool in a world without physical bills to run to anymore. It's also, unmistakably, a shift in power over your own money that doesn't exist today. This is where the conversation usually splits into two very different tones entirely. One side sees a natural evolution: faster, safer, more efficient payments for everyone. The other side sees a warning: every purchase becoming a permanent data point. A bank account frozen instantly with a keystroke instead of physically seized like before. Sweden offers the closest real-world preview available right now to any of this. Cash usage there has fallen so far that many shops simply don't accept it anymore. Some churches have card readers for donations, and buses stopped taking coins years ago. It's worked, mostly, but it hasn't been friction-free for absolutely everyone involved. Sweden's own central bank has publicly worried about elderly citizens and rural communities. Even the country furthest down this road hasn't fully solved who gets left behind. There's also a resilience question that matters until it's suddenly the only one. When the power goes out during a hurricane, cash still quietly works when nothing else does. It doesn't depend on electricity, satellites, or a company's uptime guarantee at all. Puerto Rico after Hurricane Maria became an unplanned demonstration of exactly this. Power was out for months. Card readers were useless. Cash let people buy food. So a fully cashless world isn't simply a more convenient version of the one that exists now. It's a different kind of system, with a different distribution of who benefits and who bears the risk. Governments would likely gain more precise tax collection and dramatically reduced illicit cash flow. Banks and payment companies would process and profit from every single transaction that happens anywhere. Central banks would gain a monetary lever that's currently mostly theoretical in nature. And the people most reliant on cash today, the unbanked, the elderly, those fleeing danger, communities without reliable infrastructure, would need an entirely different kind of safety net built before that floor gets pulled out from under them, not after it's already gone. None of this is likely to happen suddenly. It's already happening slowly, quietly. One contactless tap and one closed cash register at a time, without any announcement. The real question was never whether cash disappears. It's already been disappearing for years. The real question is what gets built to catch the people standing where it used to be.